Good evening, viewers. Am I audible?
Am I audible? Am I audible? Am I audible?
Join fast. So if you are getting my audio video, please write in chat box. Yes. Hello everyone, good evening. So today discussing point of this class is financial management subject, and the chapter that I am going to discuss first, WACC, weighted average cost of capital, where we will solve what two three problems under WACC method, weighted average cost of capital, calculation of cost of capital, weighted. So weighted average cost of capital is the, yes, everyone, average cost of the cost of various sources of financing. So various sources of financing are equity share capital, preference share capital, debentures, bank loans. These are the various sources of finance of a company. Well, so all of you getting my audio right? Say in chat box, yes, sir. If you are getting my audio video on the screen, audio is okay, right? Wait. A little bit some technicals. Wait, just a minute. I am sharing my screen. Wait, I'm sharing my screen. So we are going to solve the problem WACC. Okay. So weighted average cost of capital. A very important questions. So that's we are going to learn today from this class. So the theoretically we will discuss simultaneously along with the illustration. Okay. So all of you watch it. Now I'm sharing the screen. So this is the questions on your screen. WACC, weighted average cost of capital. Simple problems I have taken here. Thereafter, I will take the market value and book value, how it is computed. So once you to tell me that is screen is visible, my screen is visible. Just you say in chat box, yes, sir, because Rishabh, Halka. Just in chat box, you just tell me my uh, screen is visible or not. Now you see I am sharing. Now check. Okay. So now see here a one problem. This is the following information is available from the balance sheets of a company. All right. Equity share capital 20,000 shares of rupees 10 each. So total share capital, equity share capital rupees 2 lakh. Then reserve and surplus 1 lakh 30,000. Then 8% debentures rupees 1 lakh 70,000. Okay. Now what is given the next? The rate of tax, that is the corporate tax for the company is 30%. 30% income tax is applicable. The cost of equity capital is 12%. Calculate the weighted average cost of capital using the above figures information. Okay, so this one is the solution. Now, it's a very simple formula being used. So, weighted average cost of capital represent here the KO or KW, or you can write the KW equal. Okay, so simple. So, KE is your cost of equity capital, which is given. This is the 12% cost of equity capital. This is the KE. So, 12% means 12 by 100. So then if you express in fraction, so then it will be 0.12. So all these figures are converted into decimal form. All right. Next, you see here S by V. S represent equity share capital. V represent total value of the firm or total fund, total capital. Then again KE here, KE R by V. R by V is written for reserve and surplus. And reserve and surplus, the rate of cost of equity capital is applicable for reserve and surplus. So here it is written KE. You see here, KE plus KD, that is the cost of debenture, and D by V, debenture, that's by value of the firm, total capital, total value of the firm. So how to calculate the V? This is the sum total of this. So 2 lakh plus 1 lakh 30,000 plus 1 lakh 70,000. So total is 5 lakh. So V represent 5 lakh rupees. Now the proportion of each element, each source proportion is to be multiplied with the cost, that is the KE, multiplied by proportion of security equity share capital plus cost of equity multiplied by proportion of reserve and surplus. This is the proportion by total value of the firm. This is the proportion called this D by V, R by V, S by V. Okay, now put the value. KE just I showed you here 0.12, that is the 12%. So here 0.12. This is okay. Then what is the equity share capital total? So 2 lakhs. This is the 2 lakhs divided by 5 lakh rupees total capital. So sum total of this 2 lakh plus 1 lakh 30,000 plus 1 lakh 70,000. All right. Similarly, reserve and surplus is 1 lakh 30,000. Here 1 lakh 30,000 divided by 5 lakhs B and KE. This is the KE. Reserve and surplus retained earnings were the rate of equity. Rate of equity share capital will be applicable here. This if it is not given separately. Okay. So that whatever the rate of equity, cost of equity capital, that rate will be applicable for reserve and surplus or retained earnings. Then the debenture. So this 0.056. What is the total amount of debenture? This is the 1 lakh 70,000 divided by total 5 lakhs total capital. Now 8%, that this is the rate of debenture. You see here, it is given the rate of debenture, interest on debenture is 8%. But here it is given the 30% rate of tax. So that means that this debenture amount interest is before tax. And we have to consider always after tax. So that is 8%, 30% after you make after tax, then you will get here 0.056. So how it is calculated? 0.056. Here I am showing you. Just you see that KD here. You see that the KD. This is the given in the question. It is 8%, and it is a before tax, and the rate of tax is 30%. So here it is the this is the 8 by 100. So 0.08. So this is the 0.08 into 1 by t, 1 minus t. So when you multiply this result, the result which you get, that will call after tax. The cost of debenture, this is the 5.6% is the after tax. Here it is solved here. This is a 1 minus 30% is the rate of tax. So 30% means same 30 by 100. So into zero point 0.3 or 0.3. So this is the 30%. So 1 minus point 1 minus 0.3 is the 0.7 balance, and it should be multiplied with this. Then this is the here you get 0.056 into 100, and if you multiply it by then 5.6%. But here too we are taking a decimal form, so that is why this portion 0.056, this portion is here. This is 0.056 before multiplication by 100 you take. If you multiply it by 100 again, if you 5.6, if you divide it by 100, so same result you will get, that is 0.056. And we are taking here in all cost of sources of capital in the fraction, that is a decimal form, so that is why here it is also taken decimal form. So all of you understood that is that this is the debenture rate of debenture, sorry, interest on debenture is, it is the before tax. So we have to consider after tax. So after tax is 5.6 or for 5.6% or 0.056. This is after tax. Whenever you get this type of questions in a debenture, and remember that equity share capital, no tax deduction. Reserve and surplus, no tax deduction. Preference share capital, no tax deduction. Only interest on debenture is tax shielded amount. That is, you have to calculate the interest on debenture. This is the before rate, before tax, 8% is before tax rate, and you make it after tax rate by multiplying using this formula, this formula, this one here, this formula. If it is given 10%, so then zero point 0.1 into 1 minus t tax rate. So then the result which you will get, it is always, this result is after tax. All right. So this is why here it is taken. This is to be converted after tax here. This 8% is converted after tax, 0.056. And the debentures amount is one this. Okay, you solve this equation. This, so this is reducing all this common zero, 2 by 5, multiply this here, 0.12 into 2 divided by 5. In the same manner, point 0.12 into 13 divided by 15 here, 40 cancel, and in the same way here, this is also done. So now if you divide it, 0.24 divided by 5, then you will get here, this is, this answers you will get. Which one? This is 0.24 divided by 5. Okay. I will show you. This is your calculator. What is the value? 0.24 divided by 5. So, what is the values you are getting? 0.048 here. In the same manner, this is 1.56. 1.56. Is it visible? Divided by 50. So, what is the answers? 0.0312. 0.0312, and it is also done in the same way. Okay, so you see 0.952 divided by 50. What is the result? This is 0.01904. This is okay. So here in this way calculation is done. Now total it, all this plus this plus this. So then you will get 0.09824. Then you express in percentage. For expressing in percentage, multiplied by 100. So then here it is 9.824%. All right. So this is weighted average cost of capital. Simple how it is calculated. So you always remember this formula. K cost of equity, so share capital, total share capital divided by total capital of the firm, and in this way kd, if there is a preference share capital, then you write plus kp, cost of preference share capital, so you write divided p by v, you can write this one. Okay, if there is a bank loan, then plus debenture is given as well as bank loan is also given. Then, so bank loan, what is the rate of a cost of equity, cost of bank loan? That is the rate interest on bank loan. So you write down here and bank loan by V total. All right. So here the notes I have given you, just I explain you V equal 2 lakh is the equity share capital plus 1 lakh 30,000 is the reserve and surplus plus 1 lakh 70,000 is the debentures amount. So total 5 lakh. So this represent V 5 lakh rupees. And KD is this is the before tax and it is how we calculate after tax. So always if the rate of tax is given in the question, then you debenture, not equity share capital, not reserve and surplus, not preference share capital. Only debentures should be converted, or you have to convert it after tax. This is the normally before tax. If it is not mentioned in the questions, I will take another problem. So where you see that it is a before tax or after tax. Okay, now second sums, that is from the WACC. Okay, you see that this time you have to calculate taking the book value and market value. Book value is also given, market value is also given. Then you have to calculate the WACC, first taking the book value, then taking the market value. I will show you the solution next. Okay, just so I'm coming here. All of you tell me everything is okay. Write in the chat box. Yes, sir. Just I'm watching this. I mean, so that. Okay, 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 okay. Nice. So then, good. Well, now say I am taking the second sums. How book value? You see here what is given. Book value is given. Market value is given. Now you see the questions. I am reading out the question. The following is the capital structure of XYZ Limited. Okay, you have not hit the like button till now. So all of you hit the like button and subscribe button. Click the subscribe button. Okay, now you see that what is given here. Book value given, market value is given. So how to understand this question first? Let's see. So yes, this is the 14% preference share capital. It is given in the bracket P. So this is the book value is the 2 lakh rupees. Market value is 2 lakh 30,000. And cost of preference share capital is 14%. This KP. Got it? 14%. It's okay. This is the 14%. This is the KP. 14% is KP. Then equity share capital, this is the 17%. It is the K cost of equity. And this is you see that the 16% debenture or debts D. And it is given here 8%. This is you see, this is the 16%. This is the 16% and this is the 8%. And here you see that corporate tax rate is a 50% given in the questions. All right. So corporate that means the 50% tax is already deducted from 16%. So this is 16. Just I told you that 16 means 0.6 into 1 minus t. Okay. So 0.6, 0.16 into 1 minus t, 1 and minus t 50%. So zero point 0.5. So 16.16 into 1 minus zero point 0.5, that is zero point 0.5. So 16, you see here, 0.16 into zero point 0.5. What is the answer? 0.08 into 100. So this is 8%. So this 8% is here. So that means in this case, cost of debenture is already calculated and it is already converted into after tax form. Okay, so this is the after tax, so no need to calculate. You see that it is given here 16% and the rate of tax is 50%. So this into this equal this 50%. So no need to calculate KD after tax. It is already calculated. So you have to understand in this way also. Okay. So now that calculate the weighted average cost of capital KO using book value weights and market value weights. Corporate tax rate is 50%. Now same formula I am using here. You see KO this time having first, I have written the equity share capital. So, cost of equity multiplied by S by V. S is the equity share capital plus KP, cost of preference share capital. So, P by V plus KD, cost of debts, D by V. So, everything visible. All right. So, same formula. No need to make the table. So, that is the proportion. You just directly solve it. And now you see here K, so just I told you that is the here this one, this cost of equity 17% means 17 by 100. So if you K calculate 17%, 17 by 100, so 0.17. You see this 17%, this. And what is the total equity share capital book value? So this is the 5 lakh. And what is the total? So total V is 10 lakhs. This is the V I have shown you. This V. This is the V. This is the S. This is the D. This is the P. This is the P. 2 lakhs is the P. Okay. All right. Next, put the value. This 5 lakh by 10 lakhs and preference share capital is 2 lakh divided by 10 lakhs and cost of preference 14%. Cost of preference share capital is 14%, so 0.14. And cost of debenture KD, this is 8% after tax. 8%. So 8 divided by 100, so 0.08. And the total debenture book value of debenture is 3 lakh by 10 lakh. So which book value of debenture? So this is the book value. This is the book value column. This is the market value column. So when you calculate the book value, a WACC based on book value, then you take this column and other things will remain same. When you calculate the market value, then you take this column, and but the total values will be different here. This 12 lakh 50,000. Okay, let us first complete the book value. I hope you have understood this book value and this formula. This is 3 lakh by 10 lakhs. So, and now again you cancel it. So all this, you if you use the calculator, you will find this value. So that is how it is 0.17 into 5 divided by 10. So then you will get this value. What is 0.085 plus 0.14 into 2 divided by 10, because this 50 cancel, into 2 divided by 10, then you will get this value. So 0.028. And here this, so this 50 cancel, so 0.08 into 3 divided by 10. So then you will get this value. Okay. So I hope that you no need to show in calculator. And now the total it 0.085. I will show you the total. Okay. I will show you the total. All right. So this total in calculator, I will show you this. Okay. What is the first value? First value is 0.085 plus 0.028 plus 0.024 equal 0 0.137. This is 0.137. I hope you have seen this in the calculator. This one 0.137, and finally you multiplied by 100 to express in percentage. So then when you multiplied it by 100 into 100, you will get 13.7%. Okay, 13.7%. So this is the 13.7. So that is the WACC, weighted average cost of capital based on book value, is 13.7%. Now let us calculate based on market value. So here it is, you see, WACC. Is it visible? So you see here WACC based on market value of weights. Here I have also written here this one WACC based on book value of weights. So you take the book value, you take the market value, then you do the same process. Here again I am writing the same formula: cost of equity, then S by V plus KP, cost of preference share capital, P by V, then KD, D by V. So cost of debenture after tax. So then this is the values we put. Now, but this time here, cost of equity capital market value is 7,50,000. This 7,50,000 market value. Book value is 5 lakh. Market value is 7,50,000. Now, preference share capital book value is 2 lakh, market value is 2 lakh 30,000. Debenture book value is 3 lakh, market value is 2 lakh 70,000. So, whatever the market value is given, you take it. Yes. All right. This is so. This one, na? This is your equity share capital market value 7 lakh 50,000. So, here it is taken 7 lakh 50,000. This. Okay, so cost of cost of equity capital will remain same, 0.17. Here also you see that 0.17 book value and market value, this is same, only the value will be changed. This market value of equity share capital and book value of equity share capital. So and the total, the V, this is the 12 lakh 50,000. So this is the total. Okay, so this total V, this is the V, 12 lakh 50,000. ओके, ऑल ऑफ यू गॉटिंग माय पॉइंट? चलिए चैट बॉक्स में चलते हैं, थोड़ा बताइए आप लोग को समझ में आ रहा है कि नहीं, खाली हम ही बक रहे हैं, आप लोग को समझ में आ रहा है कि नहीं? सबको समझ में आ रहा है तो चैट बॉक्स में लिखिए जल्दी जल्दी से, यस सर, वी आर गेटिंग एवरीथिंग, ऑडियो वीडियो, जोड़िया, यस सर, ये सब ओके 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 ओके, अलका, यस सर, सो समझ में आ रहा है सबको को? गुड. So when you are getting the book value, when you are getting the market value, you take it using the market value, using the book value. ठीक है, अभी देखते हैं आगे क्या बोल रहा है solution. Now again, same process you repeat here. So 0.17 into 75 divided by 125, because all these four zeros are common cancelled. So then if you say, I am showing you the calculation. So here 0.17 into 75. What is the answer? So 12.75, right? So this is 12.75. And similarly here also I am showing you this one. Which one? Oh, okay, this is the unable to show you this in picture. Okay, now let's see. So 2 lakh. So these four zeros, these are okay. Sorry, this one. Oh, this 2,30,000. Nah? So 2,30,000. So 40 here, 40 here. So 23. So then I am showing you here 23 into 0.14. So 3.22. Okay. So 3.22. This is the 3.22. And now similarly, I will show you this next one. This one. So here 40 common cancel. So 27. 27 into 0.08. Okay. So 2.16. So this 2.16. Now we are divide. Now I will divide it. So this 12.75. Okay. 12.75 divided by 125, you will get 0.102. Is it visible? See, 0.102 plus. Then again 3.22 divided by 125. See, 0.02576. Okay, 0.02576. Next, 2.16. 2.16. Okay. So divided by 125. So what is the answers? 0.01728. This is okay. So now total it all this. So when you total it, I will show you here. Total it. So 0.02576 and 0.102. So you are getting 0.14504. This is this multiplied by 100. So 14.50 or 14.504. So you take after decimal to house 1 14.50%. Okay. So all of you understood this? How the book value is given, market value is given, then how to compute the WACC by taking book value and market value figures separately. And this is a very simple formula I have taken. So instead of making that table, so you can do it this way also. So KO represent WACC, that is weighted average cost of capital. This Q, okay, or you can write KW, except KW or KO. Okay, so this is how we calculate. Now I have taken one sums. Well, now I am going to discuss with you about the valuations of form under approach. This is a very important question. Frequently, we see the examinations questions paper under financial management capital structure topic. Okay, so capital structure topic. There are three commonly used method under capital structure. That is the net income approach, net operating income approach, and approach, Modigliani and Miller approach. And many times we get the questions. So this is the one questions I have taken. It is of the 2 year question paper 2024. All right. So this is, you see, a company's question. A company's heading, you see here, capital structure, subject financial management, and this is which methods to be used. Let us see first question. A company's expected annual net operating income EBIT is rupees 1 lakh. The company has rupees 5 lakh, 10% debentures. The overall cost of capital is 12.5%. This overall cost of capital is WACC. The alternatively we call WACC, or you can say overall cost of capital, or you can say composite cost of capital. So that is the just now we calculated. So this is the represent 12.5%. Here, what is given? Calculate the value of the firm and cost of equity according to the net operating income approach. So, NI approach, one is NI approach, that is called a net income approach. Second one is a net operating income approach. Okay. So, in this method, the total earnings is to be capitalized. That is here how it is capitalized. So, total earning, this is the 1 lakh, EBIT. EBIT, you see, EBIT, earning before interest and tax, rupees 1 lakh. It is to be capitalized with the help of overall cost of capital, this 12.5%. Okay. So this, you see that, all of you see this, how it is computed. Then again, I will explain you. You see questions, so I had explained you. All of you watch. And this is how what steps you have to follow. So always you follow this step. If you need to calculate the uh, value of the firm using net operating income approach, then earning before interest and tax 1 lakh you get in the questions. And what is the overall cost of capital, WACC KO, this is the 12.5%. And always you use this formula. Okay, just all of you see it. I am coming. Well, so okay, before starting this solution, so do you have any questions? Let me check your the chat box. If you have any doubt, any questions. Yes, yes. The WACC you can do in table form or you can do the way I solved just now. So you have both the option. You can use any one. No issues. Okay. So if you have any questions on that WACC related topic, you write down in chat box. I will reply you whenever I see your questions. Okay. Well, now we are going to solve this NOI approach. So what I told you that you always follow this step, and normally you will get in the questions what is EBIT here. This is the earning before interest and tax, and EBIT divided by KO, overall cost of capital. Overall cost of capital is given in the question 12%. Na? So it is, I just told you, na, this is the overall cost of capital. This is the overall cost of capital is 12.5%. Or you may get that weighted average cost of capital is 12.5%. Or you may get that composite cost of capital is 12.5%. Then you always use this formula for calculating. The total earnings is to be capitalized. So here it is called total earning is to be capitalized here. Here it is that what I have written here. So this is the EBIT 1 lakh rupees and KO overall cost of capital is 12.5%, and this formula shall be used EBIT divided by KO. So 1 lakh divided by, so it is a 12.5%. So percent means by 100. So 100 will go up here and 12.5. Okay, now I will show you the this is value how much we got. It is we got 8 lakhs na. So this is the 8 lakhs value we got. Okay, so this 8 lakhs. All right. Now 8 lakhs I will show you. This is what is that? Total 1 lakh 1 lakh EBIT divided by 12.5 into 100. So this is 8 lakh rupees. Okay. So this is called the total value of the form B. This represent B and total value of the form. So then out of the total, if this is the total value of the form, this includes S plus D. So this is the S plus D means this V is 8 lakhs. So it means इस 8 lakhs में दोनों equity share capital plus debenture together is 8 lakhs. The value of debenture plus value of equity share capital together is 8 lakhs. That is the total value of the company. Okay. So now it is given in the question that the debentures value is 5 lakhs. This is the debenture value is 5 lakh. So out of 8 lakhs, if the debenture value is 5 lakh, the balance 3 lakh is equity share capital. This is how we compute this. Here, what you have to write this less out of 10 lakhs, 8 lakhs. Market value of debenture 5 lakhs. D, this is the D. And the 8 lakhs minus 5 lakh, the market value of equity share, this is S. So V equal S plus D. So now V equal S plus D. So V equal if S is the 3 lakhs and D is a 5 lakhs. So total 8 lakhs. So this is the total 8 lakhs is the this total value of the company, total capital fund of the company. Okay. Now if you are calculating the value of the firm under using the NOI approach, not a net operating income approach, then you follow this step. You remember this. Okay. Now, what is this? Is the value of the firm. This 8 lakh. What is given in the question? Calculate the value of the firm. What is this? Is calculate the value of the firm and cost of equity. Cost of equity. Now, what is the KE? Cost of equity means what is KE? So, this is the value of the firm. This V, the total value of the company firm. It is given company, so you write company. Sometimes we get firm, so you write total value of the firm. This 8 lakhs. So we got one element. Now second element, that is calculation of here. Calculation of cost of equity. So you see that total earnings. What is this? Total earnings is 1 lakh. And this is the profit before interest and tax. Okay. So total profit is 1 lakh and it is before interest and tax. And the less interest on debenture. So interest on debenture is given 10%. How to understand this? This one. This is the 5 lakh rupees is the principal amount and this is the rate of interest. So 5 lakh 10%, 50,000. Okay. So this is the, so out of 5 lakh, out of 1 lakh, interest on debenture is to be deductible 50,000. That is the interest payable to debenture holders is 50,000. Okay. So this 1 lakh minus 50,000. And the balance amount which is available, this 50,000 is available for the equity shareholders. So equity shareholders will get 50,000 in the name of dividend. That is KE. We have to calculate. Now here, what is this? The balance 5 lakh you have to write. Earnings available to equity shareholders. This is EAIT. I have written EAIT means earnings after interest and tax. This is 50,000. Now this 50,000 we will get equity shareholders. Okay, this 50,000 and they will get dividend. Na? So dividend, they will get dividend. So this 50,000 dividend amount they will get. If they will get the 50,000 dividend amount, so then what is the cost of equity? How to calculate that? This one. So here KE written. You see KE equal 50,000 is the earnings available to equity shareholder divided by market value of equity share, which we calculated here. This one the S. S is calculated. Market value of equity shares, it is how much? 3 lakhs. You take this here. Okay. 50,000 divided by 3 lakhs multiplied by 100. You will get 16.666 or 67. Now I will show you this using calculator. See. What is what I said? 50,000 divided by 3 lakh multiplied by 100. So 16.666, so 16.67%. So this is your cost of equity, KE, and it is given in the question. This is the value of the firm 8 lakhs and cost of equity is 16.67%. Okay, so you calculate it this way. Sorry, how to calculate? Then you see again here this. Again here I will show you here, this is how it is calculated. First part, second part, all of you do this. See, okay, now if you have any questions from this topic, you write in chat box, I will take. So you remember this step under NOI approach. Under NOI approach, you remember this step. Well, so I will take your chat box later. Now I am going to show under MM approach. Similar one question is asked in the previous exam, so I will take that questions. All of you see this under approach. First, you have to understand the questions. That if there is a tax rate mentioned in the question, then you solve it under using the approach. At that time, uh, wait, so I'm not getting the pages is where one page. So WACC you did and NOI approach just now you have done. Okay, here this is the questions. Okay, now this question is slightly modified, and this question is of the year 2019. Okay, now see, when you will use the NOI approach, when you will use the approach, Modigliani and Miller approach, these terms you might have heard in dividend policy chapter also. You see, Aruna Engineering Company and Mira Engineering Company are in the same risk class and are identical in all respect, except that Aruna Engineering uses the debt means debenture, while Mira Engineering does not resort to debt financing. So capital structure, debt finance, debt equity mix. Okay. Now one company is using the debentures amount. Another company is not using the debentures amount. Whole equity share capital. One company is using the entire equity share capital. Another company is using the partly equity share capital, partly debentures in its capital structure. So now you very much clear with this point that Aruna Engineering uses the debt Aruna Engineering, and while Mira Engineering does not resort to debt financing. That means Mira Engineering using only the equity share capital. Okay, whereas the Aruna is using partly equity share capital plus partly debentures. Debenture, that is the debts. This is the debt debenture. Okay. Now say Aruna Engineering has rupees 18 lakh debentures carrying coupon rate of 10%. So this is 10% interest on debenture. Both the firms earn 20% before interest and taxes on their total assets of rupees 30 lakhs. So you have to understand this thing. So assets, you know that in the balance sheet, liability equal assets. So if the asset is a 30 lakhs, then liability is also 30 lakhs. Because balance sheet part always assets equal to liabilities or liabilities equal to assets amount. Okay. The amount of asset is equal to the amount of liabilities. So that means if the total asset is a 30 lakhs, then total liability is also 30 lakhs. And the capitals to be right on liability side. Okay. So corporation tax rate is a 30% and capitalization rate is 15% for an all equity company. For an all equity company means the company which is using only the equity share capital. That is the Mira Engineering. Okay, Mira Engineering using only the equity share capital. Mira Engineering does not use debenture amount. So total 30 lakhs. So in total 30 lakhs, the amount of equity share capitals, Mira Engineering. Whereas Aruna Engineering is 30 out of 30 lakhs. So 18 lakhs is the debentures amount. Balance is equity share capital. What will be the balance? 30 lakhs minus 18 lakhs, 12 lakh. That means 12 lakh is equity share capital and 18 lakhs is debenture. So total 30 lakhs. So this is the 30 lakhs. Okay. Now you will get this point in solution. Now what is given here? Sorry. Compute the value of both the companies using approaches. Slightly modified I have, but this is using approach, that is Modigliani and Miller approach. So then how to solve this problem? Very simple. Just you see that steps. So you see what is I have written solution? Calculation of value of firm under approach. So the total assets or total capital. If assets equal liability, so liability side the total capital, but other liabilities information, current liability information is not given in the question, so it means there is no current liabilities. So this is the V, 30 lakhs total V. Then the book value of debentures, this is the 18 lakhs, it is just I told you. So 30 lakhs minus 18 lakhs, so then book value of equity shares, this is the 12 lakhs. This is how we calculate. Okay, book value of equity shares. So now from this we got the book value of equity share 12 lakhs, and the 18 lakhs is already given in the question, and 30 lakhs is the total fund is given, total V. Okay, then earning before interest and tax is given here, not directly given, it is given that by 20%. Okay, both the here what is both the firm earned 20% before interest and tax on their total assets of rupees 30 lakhs. So that means their EBIT, earning before interest and tax, is 20% of rupees 30 lakhs. This is, and it is calculated here. This is earning, you say earning before interest and tax 20% of total asset, that is 20 by 100 rupees 30 lakhs. So it is 6 lakhs. Now what is the tax? This is the tax is the 30% of rupees 6 lakh. So it is gone 1 lakh 80,000. Okay. Now one the balance is 4 lakh 20,000. This is we are taking for uh, this value is to be taken for Mira Engineering Company. Why Mira Engineering Company is taking? Because Mira Engineering Company not using any debentures. It has only equity share capital whole rupees 30 lakhs. But Aruna Engineering Company having debentures plus in equity share capital. So then simple way you always follow that the firm or company which is not using the debt financing, first you calculate earning available to equity shareholders. So out of 6 lakh, 30% tax is gone to the government. So 30% of 6 lakh, it is 1 lakh 80,000. The balance is 4 lakh 20,000. So this amount 4 lakh 20,000 is earnings available to equity shareholder. That means this 4 lakh 20,000 uh, equity shareholders will get this whole 4 lakh 20,000 rupees in the name of equity shares dividend. Now you see market value of Mira Engineering Company, how it is calculated. This one continuously. Yeah, the earnings available to equity shareholders 4 lakh 20,000. Just I have shown you this 4 lakh 20,000, and this is 4 lakh 20,000 divided by 15% overall cost of capital. 15% given in the question, that is the capitalization rate. This capitalization rate is 15%. This 15. Okay, so 15% means 15 by 100. 4 lakh 20,000 divided by 15 multiplied by 100, this one. So if you calculate this value, how much you will get? You know that 28 lakhs. Okay, I will show you this. 4 lakh 20,000. Okay, 4 lakh 20,000 divided by 15 multiplied by 100. So 28 lakhs. This one. This is the 28 lakhs. Now, how to calculate? This is the market value of Aruna Engineering Company calculation. So this always you write value of Mira Engineering plus D into T. This is the simple way. Market value of Aruna Engineering Company. How this is we calculated that your what is Mira. Whatever the values you are getting Mira. So with that value you add D into T. That is the debenture into tax rate. So then you will get the market value of Aruna Engineering Company. So this is here. You see the value of Mira Engineering Company plus D into T, debenture into rate of tax. So here this is the value of Mira Engineering Company is a 28 lakhs. This 28 lakhs plus a amount of debentures using by Aruna Engineering Company is 18 lakhs into rate of tax is a 30%, that is the 30 by 100, 0.3, this one. So then 28 lakhs, so 18 lakhs into zero point 0.3. How much you will get? 18 lakhs into 3. See, 18 lakhs into zero point 0.3. It is 5 lakh 40,000. So this is 5 lakh 40,000. And 28 lakhs plus 5 lakh 40,000, this is 33 lakhs 40,000. So this is the market value of Aruna Engineering Company, and this is the market value of Mira Engineering Company, 28 lakhs. So now 28 lakhs, you see that less than, yeah, 33 lakh 40,000. This means Aruna Engineering Company market value is more than Mira Engineering Company, because Aruna Engineering Company using the debt financing, that is the debentures amount. So when debentures amount debt financing, it increase the value of the firm. All right. So this is the comparison. Now you see how to calculate the market value of equity share. This is the total. So this is the 33 lakh 40,000 is the total. That is V equal S plus D. So in this S plus D. So here this is the this 33 lakh 40,000. If 33 lakh 40,000 represent S plus D, then what is the value of S? So V minus D, this one. Here 33 lakh 40,000 minus D 18 lakhs debenture. So balance 15 lakh 40,000. So the overall total value of the firm is more 33 lakh 40,000. A firm using the debt financing. And the firm which is not using the debt financing, the total value of the firm is 28 lakhs. Okay, so this is the questions, what is given in the question. So here, compute the value of both the companies using approach. So compute the value of both the company using approach. So the your what is a Mira Engineering Company value of the firm is 28 lakhs, and Aruna Engineering Company value of the firm is 33 lakh 40,000. And this 33 lakh 40,000 together equity shares plus debenture. So this is the D into T, that is the tax shield. It is called tax shield because the debenture, when the debentures are used in capital fund, then the interest on debenture is a deductible from the profit and loss account. And at the same time, tax amount is, it will save the tax amount. So that is called tax shield. Okay, so all of you see here. Now, similarly, one more sums I have taken. This is here, these sums. This is similar. This the from the following determines the value of the form P and Q belonging to the homogeneous Rix class. So this question and that just now which I solved under MM approach is same. So then you have to practice it. Okay. So then you see here, here it is given EBIT 2,25,000. In the form is both the firm earning the same amount of profit. Here form Q and form P, it's the same amount of profit. 2,25,000 form P is earning and form Q is also earning 2,25,000. So like here Mira and Aruna, so their amount of profit is same 6 lakh 6 lakh. And now here what is given interest at 15% on debenture 75,000. So this is the interest amount. So then what is the debentures value? What is the debentures value? So then here in this question amount of debenture is not given, but the interest on debenture is given. So with the help of debenture interest, you can calculate the amount of debentures. So like here. So how to calculate? 75,000 into 100 divided by 15. Then you will get 70 75,000 into 100 divided by 15. It is 5 lakhs. So all of you calculate the 5 lakh, or then if that is the total debentures of amount, debenture amount is 5 lakh. So if you calculate the 5 lakh 15%, 5 lakh 15%, so it is coming 75,000. Okay, so this 75,000 is given interest amount. So with the help of interest amount plus rate of interest, you can calculate the total market value of debenture 5 lakhs. That means the value of debenture is in this question is 5 lakhs. Okay, and the rate of interest is 15%. Now what is given next? Equity capitalization rate. In the preceding problem, equity capitalization rate was given 15%, 1 5. And here it is given 20%. And the in preceding question, the corporate tax rate was 30%. Here it is given 50%. All right. Now you see this column, P column is showing interest on debenture. Q column is showing nothing, dash. Right. So it means that the Form P is only using the debentures amount. Form Q is not using the debt debentures amount. That is, it is the wholly equity share capital based. It is this Form P is based equity share plus debentures. Okay, so then this is the thing that is this is way. If you see, then this form is called unlevered form, V or U, unlevered form. This is V L, levered form, levered. Okay, Levered, levered, unlevered, levered and unlevered. Levered means the form which is using the debentures, bank loan. That is called levered form. And the unlevered means the form which is not using the bank loan, not using the debentures, only equity share capital. That is unlevered form. Symbolically, we learn this way. This VU, VL. Okay, in the books, probably you may have got this VU, VL. Okay. So here I have not written VU, VL because the name of the company is given. So then you have to understand then which one is the VU and unlevered, which is the levered form. So which form is using the debentures amount, which form is not using the debentures amount. So here also form Q having no interest amount, it is showing dash. But form P is having the interest amount. That means this form has used debenture. So then in if this type of questions if you get, then first you calculate the value of form. that is the value of unlevered form. That is the form key Q form. So then when you get the value of unlevered form, and that unlevered form you add plus D into T, debentures into T, rate of tax. So then this is the value of levered form. Okay, so this question, so all of you try it. So you will understand. If you have understood this Mira engineering and Aruna engineering, same concept you use for solving this. So I have given the detailed hints to you. So that is this form P is using the 5 lakh debentures and form Q is not using any debentures. So then first unused debenture debt financing company you calculate, and with that value whatever the value you got like this here this one. So then you write down the value of value of Q form plus D into T. So D into T, that is the debentures, 5 lakh into rate of tax is 50.5. So 2 lakh 50,000 this value. Okay. So all of you practice it. So hopefully you all of you have understood this approach, how to calculate the value of the form under approach and WACC. Well, viewers, so if you have any question, then I will take from the chat box. Okay, good evening. Well, all of you have understood. So then now I'm stopping this stream here. So whatever I have explained you, all of you go through it. Hopefully, all of you have understood. If you have not understood, then you watch it again. So then this topic, which are very important from examinations point of view. So I tried my level best to and make understood to you all. Thank you very much. So if you have any question, then you write down chat box. Well, okay, then I am ending my stream here. Thank you, Rishabh. Thank you, Alka. So here I am ending my stream. Good night to you all. Jai Hind.